Canton Aluminum presents the Better Homes and Outdoor Living radio show. Your local home improvement experts will offer tips, tricks, and trends to help you update, renovate, and renew your home. Do you have a question you'd like us to answer on the air? If so, you can call, click, or visit. Call us at 330-456-0021. Click on our website at CantonAluminum.com. Visit our beautiful showroom at 1330 East Tuscarora Street on downtown Canton or our display in the Hartville Marketplace. And you can always email us at questions@CantonAluminum.com. This is Karen Vrabeck, and I'm the host of the Canton Aluminum Better Homes and Outdoor Living radio show. Joining me today is Tom Crank. Tom is the president of Pioneer Financial Services. Welcome to the show, Tom.
Thank you very much, Karen, for having me today.
Tell us a little bit about yourself and about Pioneer Financial Services.
Well, I grew up in East Canton, Ohio, close to here, and I went to Malone University and graduated, and I own Pioneer Financial Services. I've been in the industry as far as the financing for about 19 years, and I'm also the head baseball coach at Malone University, and I've been the head coach for 14 years there, and then I was an assistant for 7 years. And I started Pioneer Financial back in 2000, and we do all types of financing as far as refinances, purchases, home equities, and we also do life and health insurance and property and casualty insurance. So we can do it all right. We're located right on 25th and Cleveland, just right across from the big new fire station there and just right down from Malone University.
Sounds like all of that keeps you really busy.
Oh, it does.
Most homers have a long list of projects they'd like to do for their home. Maybe renovate a kitchen, add a room or a deck, build an addition. What stands between most homeowners improving their dreams and reaching their realities is money, of course. So, Tom, what are some ways homeowners can come up with the money needed for home renovations?
Well, usually you have cash is the first one, and people a lot of times will save up for it. And I know with Canton Aluminum, they have some other programs where, 90 days same as cash. They also do that. Home equity, lines of credit. Those are ones where if you could take out a $20,000 line of credit that's similar to a credit card, but it's tied to your home. And if you only use $5,000 of that, then you only make payments on $5,000, but you have access to the other $15,000. You have home equity loans where if you're going to use all the $20,000, you can actually get a fixed rate and pay it over a certain period of time, 5 years, 10 years, 15, 20 years. Those are very good as well. And both of those, the home equity loans and home equity lines of credit, are no closing costs at all, which that's a great option for people.
And what do you mean about no closing costs?
There's no cost to you.
Okay.
So there's the appraisal that's done is paid by the lender, but there is no cost to them. There's no application fee. There's no fees at all. Now, the banks do charge roughly $350, I think, to $550 if they close it out before a certain 3-year period is what most of them are.
Okay. And so that would be like the cost of paying it off sooner
Yes.
than what the estimate is.
Right.
Okay.
You could always leave it open but not pay it off, and you would be fine. You wouldn't have to pay that.
And so that's the better way if you're going to get one of those loans is even if you do have the ability to pay it off, just leave it open so that you're not paying those extra fees.
Right. Plus you have access to, knock on wood, God forbid anything ever happened to you, fell upon hard times, you could always borrow off of that.
Mm-hmm. And is there a downside to home equity type loans? Does it damage your credit or?
No, it won't damage your credit. I mean, the home equity loan is a fixed rate, where a home equity line of credit is an adjustable rate, and it's based off of prime. And it'll be like prime plus 1 or prime plus 2, or depending on how much you draw out. There's a lot of guidelines on that part of it.
Okay.
And then there's also signature loans. So people, they may not have any equity in their home, so they may have very good credit. So a signature loan would be one that's just mainly a loan based off of their credit, and they have to meet certain guidelines income-wise. But that's another very good one that may, add value to your home if you get the home improvements done. And then also your credit card. I really don't suggest people using credit cards a lot. One thing you want to remember when you do use your credit cards, if you have a limit, let's say, of $1,000, if you're 50% of, if you're at 50% or higher, it'll end up hurting your credit a little bit. So you want to stay 50% or below. So in that scenario, $1,000 limit, you would want to stay $500 or below on that, and your credit will be fine.
And then I've seen sometimes credit cards offer a personal loan or a personal line of credit where they're giving you a fixed rate. Is it better?
That's your signature type of loan.
Okay.
Signature, yeah. That's what they'll do. They'll end up offering it. And again, it's all based off of your credit. It's not based off any of the value of your property.
Okay.
And then you can look at a 401k loan if you have a 401k or even an IRA. You just might want to consult your tax accountant to a point where there could be some ramifications, tax-wise, if you pull money there out of it. So that would be something I would suggest you ask your accountant first. There are some construction loans. Usually a construction loan is based off of when you're building a house. And then the one that when you own the house is a 203k loan. That's an FHA loan that's designed to help you do improvements based on the value after the property's been upgraded in that. And that's a good loan. That's one where if you don't have the equity, that's a route you may be able to go. And it's all going to be determined on the appraisal of the property.
And when you talk about having equity, that is owing less than what your home's worth. Is that what equity?
Yes.
Okay.
I'll give you an example on basic numbers. If you have your house is worth $100,000 on a conventional loan to pull out money to do anything, you're going to have to be at 80% loan to value. What that means is if your house is worth $100,000, your loan amount can be no higher than $80,000. That's to pull cash out. Now, FHA loan, you can actually pull up to 85% to get cash out. So that'll just determine on as far as what you want to have done with the home and that.
And when folks come to see you at Pioneer Financial Services, what are the types of loans that you mainly see homeowners or that you're helping homeowners secure?
There's really 4 great loans out there. The best loan today out there is a VA loan. It's great. There's no PMI. It's 100% financing for the VA and the veterans. Then you have a rural housing loan that, and believe it or not, people think of rural housing, USDA, you're thinking of a farm with cattle and that's not what the USDA loan is designed for. It's mainly designed for the area, and there's a lot of area in Stark County, Louisville, East Canton, Canal Fulton, Navarre. A lot of those are in it, and it's really designed to be 100% financing also. And those are great purchase loans too, both of those, the VA and the USDA. Then you have the FHA. The FHA is designed for 3.5% down when you buy a home. When you refinance a home, they'll let you go up to 97.5%. So they'll let you go all the way up there to refinance it. To pull cash out of it, you're about 85%. And then you got your conventional loan. The conventional loan is just your standard conventional loan where up to 80% you can pull out for cash. You can actually go up to roughly 95% when you refinance the house, just to refinance and lower your interest rate and lower your payment.
And explain to me again what PMI is.
PMI is designed, if you don't put 20% down or you don't have 20% equity in your home, then they're going to end up putting a little like life insurance policy for the lender, just to make sure that if you defaulted on the loan, they'd get a little bit out of it.
And do you cancel that once you reach the 20%, or how does that work?
Yeah, on the conventional loan, if you don't put 20% down or you don't have 20% equity, then what happens is, let's say you have a $100,000 house, you have a $90,000 loan. Whenever it reaches to 78%, so down to $78,000, then that PMI would automatically drop off.
Okay, these are great. You were telling me a little bit of a story before we went on the air here. And what should folks watch out for when people are calling and offering them loans or the opportunity to maybe refinance their home? There are some things that people should be weary of when people are soliciting those types of things?
Yeah, I would make sure that you get a good faith on anything you do. Going to a local bank or a local company like us, that's something that we're here. You can come in and see us. There's a lot of people that are getting calls from out-of-state mortgage companies, and they're offering them $5,000 out, and then all of a sudden they realize it costs them $7,000 in closing costs. So $12,000 of their equity is gone then. So those are all things that they want to take a look at. And again, I suggest them to, just like you go out to buy a car, you don't buy the first vehicle you see. I'd have 2 or 3 different options. And let people compete for your business.
And always check locally.
Yes.
Yes. And so if you get yourself into a trap like that and you find yourself falling for one of those offers, can folks come in and see you and work through those details?
Yes. And I mean, I'd be more than happy to sit down with anybody. There's no obligation. There's no out-of-pocket cost or anything. But yeah, I'd sit down. Even if you got somebody that's offered you something, I'd be more than happy to look at it, and I'll tell you, go ahead and do it if it's worth it.
We talked a little bit about refinancing, and what's the benefit of refinancing in order to maybe pay for some home improvements?
Well, some benefits would be you could get a lower interest rate. Just a quick story. I ended up with Canton Aluminum, and Marty and Jerry are great people, and they have a great company that's been in business for a long time, and it's great that we work hand in hand at times. But I just remember Marty referred somebody to me. I ended up going out. They had a 8% interest rate. I got them to in the low 3% interest rate. Took them down from a 29-year loan to a 25-year loan. And ended up pulling money out and lowering their payments. So it was almost like they got the home improvements for free. But it's just a matter of I look and evaluate, and I do an amortization schedule that mainly just shows what you have to pay on the rest of the life of your loan currently. And then I'll look at your new one. And if it's going to benefit you, then I'll do it for you. If it's not, then I'll let you know that it's not going to benefit for you to refinance.
What types of home improvements boost a home value?
Well, everybody thinks that, if you get a new roof, their house is going to go up based off of that value of what they put on the roof. And that's not one of the things that add value. I mean, the lenders, the banks look at it where, everyone needs a roof. And there's really no added value to if you spend, $8,000-$10,000 to do a new roof. A new upgraded kitchen and bathrooms, adding a bathroom on, finishing your basement will add value. And maybe even adding an addition with the number of bedrooms. So those are things, and the way I look at it is, I know when I bought my first house, my wife and I went in and looked at everything, and it was her, she loved the kitchen, she loved, the bathrooms, and I know guys, at least I didn't think it was any big deal to me, but the women, they're the ones that really like those, and that's what's going to sell a property.
Why have you chosen to partner with Canton Aluminum?
Well, I remember back 19 years ago that I was thinking about it. I approached them when I got in the business, and I knew what type of people they were, what type of company they had. They'd been in business for a long time, and really at first they didn't do business with me because I was green behind the ears. Let's look at it that way. But I just pursued and let them know what type of an individual I was and what my company was, and I really enjoy being a part of what they're doing, and they're people that when they go out, they care about their customers. They're not a fly-by-night type of company, and their reputation means a lot, and that's the same way with me.
If I'm ready to have my home improvement refinanced or financed, I guess is the right word. How does that loan process work?
Well, what's happened usually is if somebody comes to our office and is looking to refinance and possibly pull money out, I'll look and see what I can do for them. We'll pull their credit. There's certain guidelines we have to go by, how we're regulated. And at that point, if I can get money out for them, then I contact Marty and Jerry and say, hey, this is a customer that's interested in looking at buying windows or siding. So that's one route. Another route is Marty may call me or Jerry may call me from a home and just explain that this customer's looking about doing financing. So I'll see if it's something that I can do to help them, and if it is, great, we'll move forward. If it's not, I let them know. I'm honest with them and upfront.
Now you see, some of those offers, the 0% for 12 months or 16 months or 18 months. Are those really good offers? And how are those types of things determined?
I'm not. we really don't do any of those 0% type of things or nothing for 90 days same as cash. We really don't do those. But those are at times good, especially if you don't have any equity or you don't have, and you really need some improvements done. Say you have broken windows or you need something that needs to be done. So, and that's something that I know Marty and Jerry at Canton Aluminum, they offer. That's not something that we'll handle for them.
Mm-hmm. But folks will need to be careful of those kind of things if they can't pay it off in that time frame.
And then in that scenario, let's say if they do go that route, they can always call us, and maybe with the home improvements being done and their value of the property might be better, we might be able to refinance them and pay that off for them.
They might meet that 12 months of that 0%, and I'm not able to pay this off. That would also be a good time to come see you and say, okay, we've got X amount of dollars left, and my interest rate's about to go to, let's say, 23, which is probably pretty high, but they can come to you at that point too and say, what can we do with the rest of this money that's owed?
Yep.
Okay,
that
make
is
a
correct.
little comfortable payment for them. What kind of changes have you seen in the financial industry? You've said you've been in it about 19 years.
Oh, it's been, at one time you could actually just, if you had a pulse, you could get a loan. And now it's literally whatever stones you have in the back of your yard that needs to be unturned, they're going to unturn it. And it's mainly you have to show all of your income. You have to show any debt that you have that's out there. And the guidelines are just a little bit stricter. But it's better because at that point there's not many that are defaulting based on the guidelines that we're given to follow.
And how can folks get a hold of Pioneer Financial Services?
Well, we are located right on 25th in Cleveland, just across from the big brand new fire station. I say it's brand new; it's been a few years, but and then we're right down from Malone University. Our office number is 330-454-5320. We are also share a booth with Canton Aluminum at the Hartville Marketplace, so you're welcome to stop out there and see us there if you're out there. And Marion and those guys do a great job with the marketplace out there. But you can always walk in. We're open usually from 8:30 to 5, Monday through Friday. And I have appointments. I'll come to your home, or you can come into the office. And I'm literally 7 days a week if people and I have people, they work different shifts, and the only time they can see me is on Saturday or Sunday evening, and we'll get together then. But we're in the business to try and help people, and that's all my business is referral. And I feel the way if you treat people well, and you'll have abundance of business.
I'm ready for to contact you about my loan. What types of materials should I have available, or what types of things do I need to pull together when I'm ready to come see you?
What you'll need to, and I have on my card, I have on the back of it literally of what everyone needs to bring. It's usually your last 2 year tax returns, all pages, last 2 year W-2s. If you're self-employed, you're going to need your company's tax returns, last month's worth of pay stubs, and that's pretty much what we'll need to get started. And usually we may need your last 2 months' bank statements, checking and savings if you have it. But that's pretty much what we need to get started. And it's a process. We try to make it streamlined for you and very easy. And we'll get you started in usually about 30 to 45 days. Everything will be ready to close.
Terrific. Well, it's been a pleasure having you on the show. And thank you all for joining us on the Canton Aluminum Better Homes and Outdoor Living Show. Find us here next Saturday at 8 a.m. on 95.9 The Light.